Okay. Ladies and gentlemen, welcome to I'm Calling HR, the podcast from Employernomics. This is September 22nd, 2020. We want to thank our sponsors, Employernomics, PEO Matchmaker, and Caraway HR. Today, our featured guest is Casey Fernandez, a property and casualty agent with Hylant Insurance. You can reach them at those right there, hylant.com, 407-492-4248. That goes direct to Casey, and there's his email. They're a pretty easy one to remember. Okay. So I wanted to talk to my friend Casey today. First of all, it's a pleasure to have you on the show. We've been working together for at least a year, two years now.
Yep, and we're still willing to admit it, right, John?
And we're still talking to each other. So that's
There you go.
that's a win as far as I'm concerned.
By the way, the one client, our favorite client, came up on a report that we were going over this morning. So thank you for handling that so well. I appreciate it. It was a very positive report.
Good. Are they coming back?
Nothing for other lines of coverage. There's been no communication there, but for what you and I work with them on, we're fine.
See, that's one of the cool things about the way we work. Even though you technically lost a client, you kept them because you sent them over to me, and you're still, and I'm sending you a whopping big check every month, which I'm very glad to send, by the way.
Well, I enjoy the no activity and mailbox money scenario we have set up. It works out very well for me.
That's what we're in it for, is the mailbox income.
Yep, there you go.
So whenever I ask my favorite people like you to be on the show, and you are definitely one of my favorite P&C agents, we not only work together directly, but we also both got involved in CEO Leadership Forum together. Last week's guest was Jeff Gallo, and he and I had a lot of good things to say about you. I hope you got to see that. And I enjoy the Leadership Forum, and I enjoy the networking we've done. But I asked you to give me the 5 questions you wish people would ask you. And I got to admit, I love your questions.
Thank you.
I'm dying. Even the first one has got me. The first one, I'm just waiting to hear this. So I'm going to ask you right out, and then I'm going to sit back and drink my Coke and read.
Before you do, I had a teacher in college, and he said, if you learn to ask the right questions, the answers become apparent.
Okay.
And I took that to heart. So thank you. I'm glad you liked my 5 questions.
I'll be sipping on my my post bike ride drink here while I ask you question number 1. Casey, why is insurance like Christmas?
John, I'm glad you asked. All right. Yeah, usually you don't think of, and by the way, before I get started, I have a cat wandering around here somewhere, so if you hear an animal screaming like they're being, torn apart at the limbs, that's Jingle, and she'll be around.
There's 4 of them around here, so
yeah, so it goes. Okay, so why is insurance like Christmas? One of the things I try to do, insurance is something that most people have, most people don't understand, and they don't particularly like. So I try to relate it to things that we understand and see if we can bridge some communication. I think there's really 6 things why insurance is like Christmas. Number 1, typically your insurance policy renews once a year at the same time. So like Christmas, which it has a standing date of the 25th of December, your insurance policy renews at the same time. The second reason is, unless you're under 12 years old, typically Santa doesn't communicate to you, and oftentimes brokers don't communicate with clients prior to their renewal. So there's this period of, mystery right before Christmas, and we look at that at Christmas time with some sort of excitement and anticipation. But oftentimes with renewal, it's viewed with dread, or, oh my God, we haven't talked about this. There's 2 days before we renew. So it renews at the same time. There's typically very poor communication. And then the third thing is we often procrastinate, right? Like, your spouse wants a gift, certain gift and so on. You're like, yeah, I'll get to it. And the next thing you know, it's the 23rd of December and they're sold out.
I would ask you about procrastinating, but I'm just going to ask you to ask me about that tomorrow, okay?
Yeah, gotcha. Understood. So
it was corny, wasn't it?
So it's very corny, but I welcome the dad jokes. So oftentimes people procrastinate, and they do the same thing in the insurance business as well. They don't get renewal applications. They don't start a process. And the next thing you know, they're throwing money at the issue in over and above what they plan to spend. So if you delay in purchasing your Christmas gifts until the 22nd, 23rd, 24th of December, typically you're paying a high retail price for those gifts. And if you delay in processing or dealing with your insurance, typically you're paying a higher premium that you need to. So what happens? Number 5 is people get upset, they get frustrated, and they get angry, not only at their broker for maybe not being professional and moving the process along, but truthfully, they get angry at themselves because they think, son of a gun, this is the last time I'm going to do this. And the last reason why insurance is like Christmas is they say, I'm not going to go through this again. And yet 12 months go by very quickly. And the next thing you know, they're staring at a renewal 2 days before the policy expires. And they're like, son of a gun, I did it again. So those are the 6 reasons why Christmas is like insurance.
Were you in my house growing up? That was a lot like that.
It's a lot like that for everybody. And so, like I said, that's why I try to relate, things like this. I will tell a quick story. I got a call yesterday, and from a company here in Orlando, and their renewal was mid-September. They spend around $400,000 a year on insurance, not an insignificant amount. And their broker, the CFO is new, and their broker said, hey, we got everything covered, everything's good. 2 days before their policy expires, he shows up, 60% increase on their insurance, 60% increase. So naturally, they had no options. They renewed, but grumbling, mumbling, and so on, they reached out to some people. One of those was a friend of mine, and he connected me with them, and now we're in talks about helping them. But in that case, is the exact same thing. There was procrastination, there was no communication, there was a surprise, and what happens? They're throwing money at the issue. So far too often, Christmas is like insurance, and not for good reasons.
I'm going to skip to question 5 now because I think you just led into it. Is what is going on in the insurance market right now? And you can answer it just this question briefly, and then do the whole thing later. But aren't rates going up across the board right now?
Correct. There's what we would say is it's called a hard market, and a hard market really means 3 things. One is demand for insurance is exceeding the supply. Now, in the United States, we're used to getting what we want, when we want, for how much we want. But as we saw with COVID in February, March, and April, toilet paper was in short supply, right? Now, so many other countries deal with this where exactly. Yeah, you saw the memes of people playing poker, and it was I'll raise you to
Bitcoin. Yeah, it's new currency, Bitcoin. Yes.
Exactly. So, because demand is exceeding supply, rates are increasing. That's one. The other thing is capacity is shrinking. In other words, insurance companies will say, hey, last year we had $100 million worth of insurance in, let's say, restaurants. This year we're only going to do 90 million. So we're pulling back by 10%. So naturally, when capacity shrinks, rates continue to increase, and there can also be lower limits. We've had clients that might have had umbrella or excess liability programs of 150, 200 million dollars, and this year they're only able to get 80 or 100 million dollars, and they're paying almost the same price they paid last year. So rates are going up, capacity is shrinking, and then the other thing to think about is terms are changing. And what do I mean by that? I talk to people all the time, and they say, oh, I've been with this insurance company for 10 years, they've kept the rates the same, everything's great, I love my agent, blah blah blah. Well, that's wonderful, and that very well may be true. But think about this, John. I'm sure you have your favorite bag of whether it's cookies or chips or what have you at the grocery store. And you know how a couple of years ago you went down the aisle and for $3 you bought that 18-ounce bag of whatever, and that was a good deal. And you liked the chips and so on.
You promised me you wouldn't bring up my Oreo addiction. You really,
Okay. No. So what happens? 6 months, 8 months, a year goes by. You get the same package of whatever you like so much, and the next thing you know, it's only 16 ounces, but it's still $3. And then a year later, it's 14 and a half ounces. And a couple years later, you're down to 12 ounces. So you're getting 1/3 less of what you're paying the same amount a couple years ago for, but you're still paying the same amount. And if you don't think insurance companies and insurance carriers do the same thing to your policy, you are really naive. They
Well,
do the same thing every year where they add exclusions and put in limitations. And if your broker is not having that conversation with you, like the good news is your price is the same. The bad news is they added this, this, and that exclusion. So that's what's going on in the insurance market right now. It's a hard market. Prices are increasing, and it's really not a lot of fun for anybody.
unrelated to your, in the residential area,
Mhm.
my homeowner's insurance just doubled.
Are
Basically,
you
from
kidding?
$3,200 to $5,800.
Well, I will say this, John, just off the record.
Yeah,
I personally don't do homeowners
yeah,
insurance, but if you want to talk to someone that knows what they're doing, I'll be happy to connect you.
yeah. We might have to do that. I got two guys working on it now, and also maybe this is in your line. My E&O, as you know, we have errors and emissions insurance for my brokerage, has also gone up significantly. And just like you said, I've been reading through the proposal they sent to me, and there are exclusions in there that weren't there last year. So
Mhm.
they're charging me more for less.
Correct.
So
Correct. And it's because it's a hard market and because capacity is shrinking, the insurance company is like, John, you don't want it? No problem. We love you. Have a nice day. We're off the policy next week. And
so
then,
if we weren't dealing to a more general audience and I knew we were talking to an insurance audience only, I would go into what's going on with reinsurance right now and all the arson set wildfires and all the COVID backlash. And I know that the reinsurance market, which our average viewer may not know what that is, but there are some of you do out there that know what it is. And the reinsurance area is they're tightening up their belts because they're expecting a lot of big claims coming soon. And I know that that's driving costs up too.
correct, because the reinsurance company are the people with the deep, deep pockets, and they effectively insure the insurance companies.
Yeah,
So they have the big money, and if they're tightening their belt and limiting capacity, it's all going to roll downhill.
that's exactly. So the next question, before we go down into the rabbit hole there, because you and I we could talk about that. I know we could, and a lot of my insurance friends are watching this, going, "Hey, please talk about it." We'll do another one later, just for insurance agents. But how can I position myself to get the best renewal possible?
Okay. So I deal with middle market clients, and typically I describe that as companies 50 employees and larger, $10 million in revenue. Typically, they're spending a couple hundred, $300,000 or more in insurance every year. So insurance is a big deal to these people. It's not a Hallmark store where it's 1,500 bucks and you're insured for basically everything. It's a different animal. I would say the first thing is, like Stephen Covey said, this start with the end in mind. Decide what success means to you. In other words, if your insurance renews on January 1st, here we are late September, think about it and think, what would I be happy with knowing now from this conversation? And by the way, John, if people want, we do have a quarterly market update where we send information to people on what's going on in the insurance marketplace. So I'd be happy to share that with anybody that emails me or emails you and asks for it. But
They can
with what's
contact you by email. They can contact you by email, and you'll put them on the list.
Sure, I'd be happy to. Yeah, just say, hey, send me a market update, and then if
Put
you
me in
don't like it, we can take out. We'll get to you.
Okay.
So, if let's say in your industry, rates are going up 10 to 15%, but you've had a good history, you've had low claims, you've been with the carrier for a number of years, you've shown loyalty. I think it's fair to say to the carrier, hey, we've been loyal to you. We've paid our bills. We haven't submitted a lot of claims. We've been relatively clean. We think we should be between 5 and 10% increase at renewal. So in other words, decide with the goal in mind what you want to do. The second thing is pick a broker. And this may sound conflicting because most people think, oh, I got to shop it out. I need to get 3 brokers in mind. The one thing about property and casualty, which a lot of folks don't know, is if I go to Travelers and I go to AIG and I go to Hartford, no other agent can access those markets. And what people don't understand when they think, well, I'm shopping the market, I've got 3 agents, is if Hartford's underwriter gets 3 different applications, one from Bill, one from Sally, one from Casey, all 3 are going to be slightly different, right? They're not all going to tell the same story. They have different numbers and so on. The Hartford underwriter is going to say, oh, this is as a friend of mine said, a dog's breakfast. This is a dog's breakfast, and I'm not really interested in playing. So I'm going to just decline and go my merry way.
I've been
So
teaching that to PEO clients too, is that you don't want to submit to multiple markets, because if an underwriter's, first of all, if they see it from more than one source, it's a flag right away,
correct.
right? They're thinking,
So the solution to that in for your renewal is pick a broker, make a hiring decision, and do this mid-year. Do this 6 months before the renewal comes up. Sit down and talk to 2 or 3 people. Find out who you feel comfortable with, who has the capacity to help you, who you feel is competent and really gives a darn about willing to help you. And if you find that right person, male, female, whatever, then work with them and to create a plan to put together for your renewal. So decide what success looks like, pick a broker, start early, 6 months ahead when you have the hiring process, and then meet and communicate with the broker. Say, I think we should be between 5 and 10% at renewal. That's my benchmark. What do you plan? What's your plan to do it? And then have regular meetings once a month. It doesn't have to be a big deal. Pick up the phone. Where are we with these companies? You went to these 7 companies. Okay, 4 have declined. Why did they decline? What about these other 3? What do we need to do? And so on. And if you do that, you will have a successful renewal. Now, it may not be exactly what you want, but it'll be much, much, much better than if you did nothing and waited for the company to just send you their renewal. And I'll give you a couple examples. In the last week, I had one company that had promised me a 16% renewal, and the client was thrilled with 16%. Well, when they sent me the renewal, it was 23%. So I picked up the phone call, and I made a phone call and talked to the broker and said, "Hey, come on." And to his word, he pared it down to 16%. But it got into the system. The system went off with it, and they bumped up the rate. So a good broker will be watching out for the client, again, knowing what the goal is, and hold the insurance company accountable so that you don't have to as the client.
I see. Okay. Okay, the next, and I was going to say that again, there's no reason, and also you should research your brokers, and I'm sure you know this, even in the residential market, because there's some people that use these applications, the agent program that just shoots it out to everybody, right? It just sprays it all over the market.
Mhm.
And you and I know now, and then as we just said, if an underwriter sees something from more than one source, you send something to Travelers, and then you send it to, say, Appalachian underwriters, who also can maybe send it to Travelers, and they're going to dress it up and make it look different. You're right. So there's, they'll try to put lipstick on a pig, or whatever you want to say. Or
Well, let's frame it positively. Let's tell exactly what how it would go if you do pick a broker. So let's say you pick a broker. Let's say it's me. So then when I approach the underwriters, this is how I would approach them. I write a narrative and I say, dear Mr. Underwriter, dear Miss Underwriter, I have been put in charge of marketing XYZ company's insurance program. I am the sole agent and control this program. You are one of 5 carriers we are seeking quotes from for the renewal. So they know right then, okay, Casey's the guy I need to talk to. Casey's the guy I need to yell at or get applications from, and I deal with Casey alone, and I've got a 20% shot, 1 out of 5, of getting this business. And it just happens to be in a line of coverage that there are an industry that we're really good at, so maybe we have a 50-50 shot at getting this business. They're going to be much more predisposed to being active, quoting, giving better terms, and giving better rates than if they get submissions from Huey, Dewey, and Louie,
right.
and have no idea whether who's shopping what and so on. So that's the difference.
So I'm going to put in another question to you, and if you don't mind, I'm going to answer this. Is what should you ask your broker? And you should ask them, how do you do your submissions? Do you just send them out to everybody, or do you carefully pick and choose? And I'm going to say you should go with someone who carefully picks and chooses.
You want me to explain why?
Didn't we just do it? Well, yeah, add, if you can add more to
Well,
that.
here's why. Here's why. If you go out to the market every year, let's say 10 or 12 companies, 10 or 12 companies, by year 3, the underwriter is saying like, I see this every year. They never switch from where they are. This is a pain in the rear. I'm going to give our normal pricing plus 20%. If we get it, we get it. If we don't, I'm not going to waste time on it. And they get numb to you and they really have no interest in being aggressive with you. But on the other hand, if they see it maybe every 3 to 4 years, and then you have a conversation with them about, hey, this we are marketing this out, we're going to make a switch, they feel like, well, this agent, this company is respecting me and they're not wasting my time. So again, another reason why they're more interested in offering better terms and conditions than if they just get it, blanketed out.
See. All right. I think we beat that one to death. Now I got another one. Well, but that was good stuff. But a lot of people are going to go, okay, let's get to the good stuff. And here's a good one. And there's two good ones coming up, folks. So you're going to like this one and the one after it. This one is, first of all, Casey, how did you get involved in insurance?
Had a conversation a couple of weeks ago with a friend of mine in Ohio who works with Hylant, and he said his father, and I have almost the same experience. He said his father was a maritime lawyer, and he said to his son, my friend Nick, he said, "You know what I would do if I were you?" And Nick said, "No, what?" He goes, "I'd get into insurance." And Nick said, "Why?" He said, "Because," he goes, "I know people that are total idiots and they're in the insurance business and they're making a great living." And he said, "I think you could do really, really well in that business."
I'm not sure I know how to take that.
And well, hey, I'm in the business, but my point was I worked with Paychecks in the 1990s, a payroll service, and we were starting to work with insurance agents to work against and to compete with those dreaded PEOs.
Those PO,
And
those bastages.
yeah, yeah, exactly. And I remember going to the meetings, and the broker was pretty much, I won't call them idiots, but all they would talk about is, oh, here's how great our insurance company is. Here's how we give you the best rates. We give you the best service and so on. And everybody's like falling asleep. And we'd finally put the deal together. I would do 90% of the work, and I would go out to my Saturn, and the insurance agent would go out to their Mercedes.
Yeah.
And I would say, what's wrong with this picture? So I got into the business because I was in the dot-com industry at late 90s during the dot-com boom. I had experience from the payroll side of how workers' comp worked. And
Right.
I had a friend in the industry that said, hey, you need to get in this industry. You do really well. So that was 20 years ago, and it's been a great ride.
I know what you mean about the cars. I've got my, you've seen my beat up full old Ford Transit that I drive around just because it carries all my bikes. And I'm just too stubborn to change it. Not that I couldn't, I just don't. But I go to the PEO conventions and I go in and there's all those Mercedes, BMW, Bentley, all these really, Maybach, whatever that is, all these
Right.
amazing cars.
Right. Well, and to kind of parallel with my friend, my father was a small businessman, and he despised insurance. And I realized, insurance policies are legal contracts. They're written by attorneys. They're
Mhm.
sold by marketing majors, and they're read and understood by pretty much
Nobody.
nobody. Exactly.
I'm
And
sorry.
I thought, wow, what a great industry where I could actually help people. I could actually help people understand what they have. They're spending 150, a couple $100,000 a year. I think they might want to know what that's going for and what kind of return on investment they're getting for their money. The truth is, most people don't know that, and so that's why I have fun helping clients.
So we already have a question like, what are you driving?
I drive a 2019 Acura RDX.
An Acura. Okay, see, that's better than a Saturn. A
By
little.
by
I
a bit. Yeah.
okay. So this question I'm looking forward to because this has got me interested. Well, it does for me, but that's because I'm an agent. But can insurance make me money, and if so, how?
Oh, okay. Absolutely. Number one is insurance. Think of insurance almost like a mortgage. Most people can't buy a house 100% cash. So let's say your home is worth 350,000. Most people can't write a check, close, and be on their way. So a mortgage simply allows you to do more or have a bigger house than you would ordinarily be able to afford if you were just writing a check in its entirety from a bank. Insurance lets you do the same thing. It allows you to provide services that perhaps your competitors can't. I've had that, and recently helped a client because their insurance agency was arguing with Costco about why they couldn't do what Costco wanted, and we were able to help them, and they got a $150 million contract. Now, the insurance cost a decent amount, a few $100,000, but to get a $150 million contract that they were otherwise not going to get, not a bad deal. The other thing is there are things like litigation buyout insurance and reps and warranty insurance and other things, even captives, that I won't get in the weeds on, but there are creative ways to use the insurance marketplace to your benefit and to actually get a return on an investment. And if don't know what your return on investment is on your insurance spend, you need to talk to your broker. And if your broker can't help you, you need to talk to me, because that's one thing. If you're spending that kind of money, if you were paying an employee or a salesperson $150,000 a year, you would want to know, what am I getting for my 150? And if you're doing that with insurance on an annual basis and you don't know the answer to that, I think you're being underserved.
I used to be in the captive business. Well, I technically still am. I just haven't done it in the last 10 years, but I used to help PEOs set up a captive. And I know that people are wondering, what's a captive? Well, it's basically you own your own insurance agency or your own reinsurance device, which allows you to keep some of your premium. And if you have good claims, you get you get a lot of tax advantages with that money, and you pay a lower premium, and you don't get taxed. It's kind of hard to describe, and I know you know this, but if, say, a workers' comp claim comes in and say somebody cuts their wrist, well, it's the $300 visit to the eccentric care, but the claims person is going to put a $40,000 reserve on that, right? And they're going to require the insured to put up $40,000 to cover all the expenses that may come from that claim. Well, that's considered a deposit, and it's considered an asset, and you can't write it off. You can't deduct it. But if you have a captive where you put the $40,000 in the captive, and the only thing that gets charged is the $300 to Centricare, okay? Meanwhile, you've got that money sitting out there in like offshore in Delaware, which I think is hysterical. Delaware is considered offshore. It's sitting there. It's making interest, and it's usually in treasury bills, so it's offshore money in UST bills. So it's sitting there making money, and it's not a asset that you have to list, and you can write off that $300 because that's all you paid. You don't have to pay that. You can see where I'm going. There's a lot of advantages, and I know you've done some things like that with retention funds and captives, haven't you?
Absolutely. Our company actually has a division that focuses strictly on what we call alternative risk,
Right.
where we can put together a captive or handle for a company that's selling their business a rep and warranty policy, which kind of protects them if they're selling their business, a lot of different things like that. So the insurance industry can be, it's like anything. It's like a tapestry. You start with one thread and you keep going. You could go for hours. So I don't want to bore anybody with that. But if folks do have any, questions, you have my contact information and know how to reach me. Did you have any other questions, John, or any other?
Yeah, I'm sorry we went down there, but I do remember that those, companies that have more money to play with, that have $100,000, $200,000 a year in premium, there are certainly options where you can, take advantage of tax benefits where you could deduct that money, or if you put it into, like you said, a self-insurance device, a captive, something, you can make that money work for you, for the company, and for all the employees of the company.
Right. Well, there's a reason why banks and insurance companies usually have the tallest buildings in town. They're dealing with other people's money and they're making money off of it. And if you're getting to the point where you're spending $500,000 or more, on insurance every year, there are great alternatives that you can look at without doing anything risky and become one of those companies as well.
It's all totally approved by the IRS. And,
Sure.
in fact, they encourage it because it lets them keep better track of the money. So they are, and the IRS likes to keep track of money. So, yeah. Okay. The last question we already started to answer was what is going on in the insurance market right now? And you told us it was a hard market. Is there anything else you want to add to that?
Um, I would say specifically there's three areas where it's really hard. One is auto insurance is really going up for commercial accounts. Excess liability is going up. Those are, you think of that as your umbrella. And then what we call executive risk, and that's directors and officers liability, EPLI, employment practices, fiduciary and crime risk. Those are all going up significantly because there's been, especially with EPLI, you've had a lot of claims, the Me Too movement, and things like that driving up claims. So if you have autos, if you have to have an umbrella, and if you have employees, um, you're recognizing that insurance is getting expensive.
Yeah. And that's, I guess, so before we let you go, since there are people watching this who may know someone who could use their services, yeah, describe the pain that someone would be in where you could fix them. I know you've kind of referenced a little bit, but sort of sum it up like 3-4 pain points. If someone is talking to someone and they hear them say, for example, we just, our insurance company, our insurance premium just went up 60%. Yeah.
Well, obviously, price would be an issue. I think here's the thing: the folks that we typically help will say things to me like, "Wow, we just got the renewal, didn't see it coming out of left field, and we were up 50%." So that tells me their agent wasn't communicating to them. There's no communication. That's the other thing you might hear. Oh, I never see my agent until 2 days before renewal, and he shows up and wants a check. So poor communication, increased rates. The other thing is there's no proactive thinking on behalf of the broker. So, I mean, when's the last time a broker came to you with an idea to help you make money or to help you minimize your exposure? Typically, that's not what insurance brokers are doing. They're simply quoting and picking up a check, quoting and picking up a check. So, the other thing I would say is if people are having changes in a corporation, if the CFO is changing, if the chief operating officer is changing, those are typically excellent times to reevaluate how they're handling risk, in addition to premiums going up or no communication or no proactive thoughts from a broker.
So what I'm hearing, and let me sum up for you, is if somebody is currently dealing with a Star Trek agent, they beam in at renewal time and then beam out with.
That's cute. I got to use that.
I've been using that one for years. You can steal it. Feel free. It was another agent that told me. So I've already given him credit more than 3 times. And as you know, once you say something 3 times, it's yours. Right? I can say, as Casey said, and the next time, well, as it's been said, and the third time is, well, as I've always said. But yes, so if somebody's dealing with a Star Trek agent now that isn't forward-looking, isn't meeting with them on a regular basis to look at, and this is another key word I think you implied, I don't know if you use the 2 words together, but risk management, right?
Well, risk management is huge because that's a great point, John. There's 4 ways to deal with risk. Insurance is just one of them. You can also mitigate it, you can avoid it, or you can accept it. And if you're not having those conversations with your broker about how to mitigate, accept, and avoid risk, then all you're doing is looking at how to write a check to transfer the risk through insurance. And that's not a good deal for you because there's lots of ways you can shrink the amount of money you're paying for insurance by putting in some preventative steps and by accepting more risk.
Okay, so somebody who doesn't want the Star Trek agent, someone who wants somebody that's going to be proactive in helping them mitigate risk as well as insure against it, and someone that's going to actually show them ways they might actually be able to make some money. Those are the people that we want to call you, right?
Absolutely, as long as they can, handle my corny jokes, we are all set.
If I know them, believe me, they can handle your corny jokes.
Well, as I've told you before, John, with a name like Casey Fernandez, I am an Irish Mexican,
Yes.
So it's best that you don't call me between St. Patty's Day and Cinco de Mayo, because, as you can see behind me, I've got the American flag and the Fernandez family seal. So, but between St. Patty's Day and Cinco de Mayo, I'm not going to be too helpful to
And
you.
a significant wine rack, it looks like, too. Yes. Okay, great. Well, I can't think of any more questions. You got anything you want to say to the people that are listening?
No, I really appreciate the time. I know insurance is not a sexy topic, so to speak, but as we found out with COVID and a lot of misunderstanding about how insurance works, particularly business interruption, and that can be a whole nother conversation. I'm more than happy to answer questions. And although I serve the middle market, if you're a small business, you've got 5 employees, you've got $1 million in revenue, and you have a question or you have a need, you have my phone number, 407-492-4248, and my email that was shown earlier. Call me or reach out to me. I'm more than happy to point you in the right direction, even though it may not be me that's actually helping you.
That's exactly what we wanted to hear. So we got one more screen we have to do before we say adios. And that is to contact us. If you want to talk to us at info@employernomics.com, use our website contact form. There's our phone number, which is a lot like yours. We have a lot of the same numbers. And I'll put yours up at the bottom of the video too. And of course, if you'd like to be a guest, and also let us know when we should have Casey back again, at least, in the next couple of months, I think, because we got stuff we can go into.
Well, remember, Christmas is coming.
It's time to beam in and out. Okay, folks, that's it for I'm Calling HR this week. Tune in next week to hear more. Casey, thank you for joining us. It's really been a pleasure.
Don enjoyed it. Thanks for inviting me. Be well.